Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hey Lauren.
Hey, how you guys doing?
Very good. Well Lauren, as this episode goes out, you'll probably be on vacation, I imagine,
okay.
Because and I'm going to be aiming for vacation because we're just finishing the April 15th tax filing deadline that actually became April 18th this year. So, so taxes are still on our minds.
Yes.
And, I thought it was an interesting thing because there's a lot of controversy going on right now, and this is not, I don't want to intend this to be a political discussion.
Right.
This is really about, I think there's a tension going on within our country where, you know, people are very concerned about our deficits.
Right.
And they're all, so there's, how do we address those deficits, you know, and from the Republican side they're talking about cutting programs, expenses, and not raising taxes.
Right.
And then from the Democratic side, it's some cuts, but also they want to raise taxes on certain levels of income on the so-called wealthy and bigger businesses to increase taxes. So it's an interesting tension, and I thought it was, this article just came out this week that was very interesting about, the headline in the Seattle Times was that Americans pay less taxes overall, but more income tax than their global countries that we compare it to.
Oh really?
Yeah.
Other countries.
So yeah, it's very interesting. So here's what we found out. They said if they look at the total amount of taxes that we pay as a percentage compared to all the goods and services that we produce, we pay 24% of our gross domestic product in taxes.
Is that state and local?
All levels of government.
Oh, okay.
Okay, all levels of government. So what's interesting though is that we compare that to some of the other developed countries. For instance, like Kelsey, like this one, Australia pays 27%, because Kelsey's friend is from Australia.
Okay.
Canadians up north, 31%.
Okay.
And then you go up to all the way up to Sweden is 46%.
Wow.
Okay. So if you think about that, that's you know, okay, great. So that makes us very competitive in the world marketplace because we have a low tax burden and allows us to have disposable income to buy goods and services. And interestingly enough, by far, the United States is has the largest amount of assets overseas because of compared to other countries because of our ability to invest abroad. So it's investments, not investment in assets. Now, here's the thing though, and this is where it gets to this argument about raising income taxes. Of the total tax burden, it sounds great. Okay, we pay way too less of tax, but actually our income tax rate is actually quite high. Sweden, for instance, they only pay on average 25% of taxes as income taxes, and the rest is called value-added taxes. Those are like national sales taxes on different aspects of production. Conversely, the United States, we have an upper tax rate of 35% for both corporations and for individuals. So actually, if you just look at the income tax portion of our tax burden, we're actually one of the higher ones compared to the rest of the global countries, but we don't have the value-added tax. That's the difference. So what does that mean? Well, it could mean to me, if I'm looking ahead, that one of the compromises that might come out of it is maybe we will have a national value-added tax in the future. And what does that mean? Well, everybody knows about the iPad. The Apple iPad is a big seller. It's a huge thing for Apple. In the United States, the lowest price iPad costs $499. Okay. Right. If you go to Sweden, Germany, France, it's like $742 for the same iPad.
Interesting.
So thinking about this, if we want to increase taxes, would we rather pay more on our income tax, or would we rather pay more for our iPads? To me, that's an interesting part of the argument. What do you take out of that?
I don't know what we should do, but I mean, certain things would happen if we had, for instance, if we had a value-added tax, which I have no idea whether we should do or not. People would save more.
Right.
Because it would be cheaper to save. Right. In a sense.
Right. Because you see that, okay, would I rather spend that extra $200 or $300 on this item or just save it?
Or just save it. Yeah. And it becomes, and when you're making those sort of marginal decisions. I mean, the essential things you're still going to buy, but when you're making those kind of marginal decisions, I don't know if I really need this or not. Having a tax that high on things that you buy will encourage you to save.
Right. And
that's just an interesting
and some countries like Norway, for instance, who have huge, and this is kind of doing the value-added tax on oil and gas. Right. They have huge amounts of oil production off the coast of Norway, but they purposely put value-added taxes on their price of fuel because they, first of all, it helps keep their government out of deficits.
Right.
But then number two, it also encourages them
Yeah.
as a social tax to maybe use electric cars and hydrogen cars
Right.
and mass transportation.
I think the other thing that would happen is it would be a very difficult adjustment for our economy, which is based so much on consumption.
Right.
I mean, if we...
So it's an interesting argument.
Right.
And I'm not trying to solve it.
No,
here.
I can't solve it either. But those would be the two
Right.
things that immediately come to mind. People would save more, and we would have a tough time adjusting.
Okay. So when you hear these arguments about raising income taxes, actually our corporate tax burden is very high as an income tax compared to the rest of the global countries, and that's why I would like our audience at least to think a little bit beyond just taxing a certain level of income, but also
Right.
think, okay, what are our taxes being spent on? Is there other alternatives?
Right.
All right. Well, thank you for an interesting episode of Erickson TV, and we'll see you next time.
See you next time.